Today, we're witnessing a major shift in the world of money. The dynamics of global currencies are changing rapidly. The US dollar, long the world's dominant currency, is weakening, while the euro is gaining strength. This shift is more than just numbers on a screen. This isn't just a story for bankers, it affects everyone, from shop owners in Paris to companies in New York. The ripple effects are felt in everyday life. Currency changes impact the prices of imported goods and the value of your money when you travel. Imagine paying more for your favorite imported cheese or getting less foreign currency for your dollars. Understanding why the euro is rising and the dollar is falling is crucial for our economic future. It helps us make informed decisions, whether we're investors or everyday consumers. This shift is the result of many factors on both sides of the Atlantic. Economic policies, interest rates, and political stability all play a role. Think of it like a seesaw. As the dollar drops, the euro rises. This balance is delicate and can shift quickly. The euro-dollar relationship is one of the most important in the world, influencing global trade and investment. It affects how countries do business with each other. For example, oil prices are set in dollars, so a weaker dollar can change costs for euro users. This can lead to higher or lower prices at the pump. A strong euro means European consumers can buy more American goods and travel to the US more cheaply. This boosts tourism and retail sales in the US, but for European exporters, their products become pricier for Americans, which can hurt sales. This can lead to a decrease in demand for European goods. The strength of a currency is like a report card for a region's economy. It reflects the health and stability of that region. Right now, Europe's report card looks better than America's. This is due to various economic indicators and policies. We'll explore why this is happening and what it means for Europe. The reasons are complex, but understanding them is crucial. There are both benefits and drawbacks to a strong euro. While consumers may benefit, exporters face challenges. This is a complex issue, but we'll break it down into simple parts. Our goal is to make it understandable for everyone. The story of these two currencies is still being written, and it affects us all. Every change in their value has a ripple effect across the globe. Let's dive into the reasons behind this shift. We'll look at the economic, political, and social factors at play, and see what it means for your wallet and the global economy. Understanding these changes can help you navigate the financial landscape. The euro's rise in value isn't happening in isolation. It's deeply connected to the recent decline of the US dollar. As the euro strengthens, the dollar has been losing ground, and this shift is being watched closely by markets around the world. One major reason is the US government's high spending and ballooning national debt, which have made investors increasingly nervous about the country's financial stability. When confidence in the dollar drops, people and institutions around the world start selling dollars and buying other currencies, like the euro, to protect their wealth. Lower interest rates in the US also play a big role, making the dollar less attractive to global investors who are searching for better returns elsewhere. As a result, money flows out of the US and into Europe, pushing the dollar down and the euro up, creating a cycle that can be hard to break. America's large trade deficit adds even more pressure. When the US buys more from abroad than it sells, it means more dollars are being exchanged for foreign currencies on the world market. With so many dollars in circulation, their value drops, making each dollar less powerful on the global stage. Political uncertainty and policy disagreements in the US only add to the unease, shaking investor confidence even further. In times of uncertainty, investors look for safer places to put their money. Right now, Europe appears more stable and reliable. It's not just about numbers and charts, it's about trust in the future and where people believe their money will be safest. The loss of confidence in the US economy is a major reason for the dollar's recent slide, and it's a trend that could continue if these issues aren't addressed. All these factors, debt, interest rates, trade deficits, and uncertainty, combine to make the dollar weaker and the euro stronger. The global financial market reacts quickly to these shifts, with investors and governments adjusting their strategies in real time. As the dollar weakens, the world's economic balance begins to shift, affecting trade, investment, and even political influence. This is why the euro's rise is about much more than just exchange rates. It's a reflection of changing confidence and shifting power in the global economy. It's a powerful signal of changing fortunes between two economic giants, and the world is watching closely to see what happens next. Europe's economy has surprised many by showing real strength, even in the face of global uncertainty and shifting markets. While some predicted a slowdown, Europe has managed to defy expectations. European countries have adapted to challenges like high energy prices and supply chain issues, using innovation and collaboration to keep industries running smoothly and exports moving. Quick action, like finding new energy sources and investing in renewables, has boosted confidence in Europe's future. These investments are not just short-term fixes but steps toward long-term sustainability and independence. Investors see Europe as stable, so they buy euros, making the currency stronger. The euro's value reflects this renewed trust and optimism in the region's prospects. Key economies like Germany and France have kept unemployment low, fueling spending and growth. This stability helps families and businesses plan for the future with more certainty. This creates a positive cycle: more jobs, more spending, more investment. As confidence grows, so does the willingness to invest in new ideas and expand businesses. The European Union's Recovery Fund showed unity and support among member countries, sending a clear message that Europe stands together in tough times. This political and economic cooperation reassures investors. It shows that Europe can act decisively and collectively when it matters most. The euro is backed by a group of nations working together, not just one. This shared commitment gives the currency a unique strength and resilience. This collective strength is a big reason for the euro's rise, making it a symbol of European cooperation and shared progress. Europe's adaptability and unity have made it a safe bet for global money. Investors from around the world are taking notice of Europe's ability to weather storms and come out stronger. The world is watching and investing in Europe's resilience. As Europe continues to innovate and cooperate, its economic outlook remains bright. That's why the euro is gaining ground, becoming a symbol of hope and stability for the future of Europe and beyond. Central banks play a huge role in the currency story. The US Federal Reserve and the European Central Bank have taken different approaches. The Fed raised interest rates aggressively, but now may pause or cut rates as the US economy slows. Lower rates make the dollar less attractive to investors. Meanwhile, the ECB is keeping rates higher for longer to fight inflation. Higher European rates draw money into euros for better returns. Investors move billions to Europe, pushing the euro up. The Fed focuses on jobs and prices. The ECB is laser-focused on inflation. This gives investors confidence that the euro's value will be protected. The gap in interest rates is a key reason for the euro's strength. Different strategies, different results, shaping the global currency landscape. A strong euro brings real benefits for Europeans. It makes imported goods, like oil, gas, and electronics, cheaper. Lower import prices help fight inflation, making everyday life more affordable. European consumers get more for their money, especially when buying from abroad. Travel to the US or other countries becomes less expensive for Europeans. Companies that import parts or materials see their costs drop, boosting profits or allowing lower prices. A strong euro signals economic health and attracts foreign investment. This investment funds new projects, creates jobs, and drives innovation. The benefits of a strong euro are felt in wallets and across the economy. It's a sign of stability and confidence in Europe's future. But as we'll see, there are challenges too. The strong euro is a double-edged sword. Let's look at the other side. A strong euro creates problems for European exporters. European goods become more expensive for buyers in the US and elsewhere. Higher prices can mean fewer sales, hurting companies from car makers to luxury brands. Exporters face tough choices: accept lower profits, cut costs, or risk losing customers. If sales drop too much, jobs and production are at risk. Exporters prefer stable exchange rates, not a constantly rising euro. The strong euro puts pressure on a vital part of Europe's economy. It's a classic trade-off. What's good for consumers can be tough for exporters. The challenge is finding balance. For many businesses, a strong euro is a real headache. The winners and losers are clear. The strong euro has mixed effects on tourism. Europeans traveling abroad benefit, their money goes further in the US and beyond. But for foreign tourists, Europe becomes more expensive. American and Asian visitors may choose cheaper destinations. This can hurt hotels, restaurants, and shops in Europe's top tourist spots. Countries relying on tourism like Spain and Italy feel the impact most. The industry must adapt, offering deals or targeting European travelers. The strong euro empowers European tourists but challenges the continent's tourism sector. Creativity and competitiveness are now essential. Tourism is another area where the euro's strength cuts both ways. For investors, currency shifts bring both opportunity and risk. A rising euro attracts investment in European stocks, bonds, and real estate. Companies focused on the eurozone can benefit from strong consumer spending, but trends can reverse quickly. If the US rebounds or Europe stumbles, the euro could fall. Currency markets are volatile. What looks certain today can change tomorrow. Export-focused companies may struggle, hurting their stock prices. Investors must weigh both company health and big economic trends. Betting on currency moves is risky business. The euro's rise creates winners and losers in the investment world. Smart investors stay alert to global shifts. Understanding currency trends is key to making wise choices. The landscape is full of both promise and peril. The euro's rise against the dollar is reshaping the global economy. It's not simply good or bad, there are winners and losers. The shift is driven by US weakness, European strength, and different central bank strategies. For Europe, a strong euro fights inflation and boosts buying power. But it also hurts exporters and tourism, creating real challenges. Navigating this new landscape requires balance and awareness. Individuals, businesses, and investors must adapt to changing fortunes. The euro-dollar dance will continue, shaped by policy and events. Watching this relationship is key to understanding our global economy. The story of two currencies is far from over.